Hello everyone, welcome to GRS Trading Time. Today we'll understand what the index is, why it exists, and break down Nifty 50. Before we begin, disclaimer that this content is for educational purposes only. A market index tracks market movement via select shares. Most are market cap weighted, meaning bigger companies have more influence. Stocks in an index are usually highly liquid, which allows investors to replicate the index at low cost through funds and ETFs. Key point here is, stocks move first, index reflects. Indices measure direction, benchmark portfolios, track sectors, base derivatives. They're a market thermometer, not the entire market. Key indices: Nifty 50, Bank Nifty, Sensex, SX40. The composition of stocks in the index are reviewed and modified from time to time to keep the index representative of the underlying market. Now let's talk about Nifty 50, 50 largest liquid Indian firms by free float market cap. Looking at the sector-wise weightage, financial service lead with 37%, followed by information technology at around 16% and energy at 15%. In terms of the top stocks, HDFC Bank were on 13%, Reliance were on 9%, ICC were 9%, Infosys were 5%, Airtel were 5%. Heavyweights dominate, even if many fall, Nifty may hold. Summary: indices are used to measure, don't predict. Nifty reflects large cap India. Stocks lead, index follows. If this video added value, please like and subscribe. That support helps this channel grow. Thank you for your time. See you.